Hi, everyone. This is Marty Becker. Welcome to episode number 51 of the Atlas Annuity Podcast. In this episode, we're going to discuss should you get an annuity that has an inflation rider attached to it, or should you just get the highest level income possible? Now, this has been a big debate for a couple years now because the biggest thing on everybody's mind through 2022 to the time of this recording, which is the end of 2024, is inflation. And trust me, I get it. It has been like oppressive inflation. And I live in the Midwest where it's was never like terrible, but when you're seeing gas prices in St. Louis get up to $5 a gallon at one point, it gets a little aggravating, is a nice way to say it. So I totally get where people are coming from and why I constantly get this question. So I thought I would make this episode mainly based on a recent conversation I had with a new client who funded an annuity. We got her the highest level income that is available. And when she told, I think it was maybe her advisor or CPA, one to two, they almost made her feel bad, was the impression I got from talking with her, maybe even made her feel dumb. At the very least, they made her second guess my recommendation and her funding because this gentleman told her, oh, well, you should have got the inflation annuity. So I'm going to go ahead and I'm not going to say put it to bed because if you want an inflation annuity, we'll get you one. It's totally up to you. It's your money. But let's do it because it makes sense. So we're going to settle this today by using math. Why? Because numbers don't lie. So let's jump into this. So, is the inflation annuity worth it? At the time of this recording, which again is the end of 2024, right now, a 65-year-old couple could get an immediate payout of a little over $7,100 per year for every $100,000 that's funded. So that's a 7.14% payout rate. The same $100,000 going into an inflation annuity with a built-in 3% COLA, so a 3% raise every year, that same $100,000 would get a 65-year-old couple almost $4,750 per year. So right out of the gate with the level income, you're getting over 50% more spendable income on day one. What is the eighth wonder of the world? It's compounding. That's what Einstein said. So let's see how this played out over the long term. I explained the inflation annuity versus just a level income annuity. When speaking with clients, I like to use the analogy of there's always a crossover. Okay, it's no different than the argument of should I take Social Security at 62 or should I wait until age 70? And depending on who you ask, like I've talked to people before, their advisor basically told them they were stupid if they didn't wait until age 70 to take their Social Security. One thing we have to factor in that scenario is that, okay, I waited until 70, I'm getting a higher amount, which is great, but I also missed out on 8 years of income if I just would have taken it at 62. So they had to make up that income difference somewhere. The inflation annuity is no different. So on the left table here, we're looking at what the income difference is from the level annuity versus the inflation annuity. Now, the inflation annuity wouldn't catch up with the level annuity until about year 15. And the difference in income that you would have received in that 15 years would have been almost $19,000 to the benefit of the level income annuity. However, eventually it surpasses it. So now we got to find out, okay, what is the break even point? What is the crossover point to where I get my $19,000 in missed income back from the inflation annuity? And you can see that's another 11 years of collecting income. So at the end of year 26, beginning of year 27, you would have made up that gap of the $19,000. So we can look at the total income at the end of year 26, which would have been age 91 for this couple. The level income would have produced a little over $185,500. The 3% inflation annuity, around $183,000. So that crossover point is around year 25, 26. Okay. So I get the concern with inflation. I really do. It's affected everyone. Unless you're a multi-millionaire, you felt it somewhere, whether you had to buy a car or whether you had to buy groceries, you noticed it. Okay. At the end of the day, the best solution for inflation is going to be owning stocks. That's not Marty Becker's opinion. I don't sell stocks. Okay. But that is right out of the study guide for the Series 65 exam. That's what I'm studying for because I have a lot of clients asking me to do it for them. I'll get there eventually. Right out of the study guide for the Series 65 exam, it says in black and white, the best solution for inflation is stocks. This always goes back to it's not about the product we choose. It's about the strategy. That is what I do, and I do it every day with clients. Atlas Financial Strategies is named that for a specific reason. We specialize in safe money retirement strategies. And if you're curious if the Atlas annuity strategy will work for you, all you have to do is reach out and book a short phone call. The best way to do that is by going to atlasannuity.com. That'll take you directly to my calendar page and just book a convenient time for you. And then we can get all of your questions answered, and we will look at all of those factors, taxes, Roth conversions, inflation, all of those things. Now, again, I can't give you advice to buy or sell any securities. I don't give tax advice, but I have very sophisticated software that incorporates all of those things into your strategy. Now, if you're finding this information helpful, we appreciate everybody who does listen. This is episode 51. I never thought I'd make it past episode 5, to be honest. So we appreciate everybody who checks in with us every week. Hopefully you're finding this information helpful. If you are, subscribe to the podcast, either on the podcast players, if you listen to this in your car. If you're watching this on YouTube, subscribe to the YouTube channel. And also give us a like and share this information with somebody that you think could benefit from it. Again, this is Marty Becker coming to you with episode 51 of the Atlas Annuity Podcast. Wishing you all the best in your financial education. We'll see you in the next episode.
We hope you enjoyed today's episode of the Atlas Annuity Podcast. All information presented is for educational purposes only and is not a recommendation to implement any tax strategy, nor is it a recommendation to buy, sell, or transfer any security or insurance products. Atlas Financial Strategies Incorporated is an insurance-only licensed entity, and any decisions to buy or sell securities should be discussed with a licensed securities advisor, and any tax strategy should be discussed with a licensed tax professional. Past performance of any strategies or products mentioned are not a guarantee of future returns. For any other questions or concerns, please go to www.atlasannuity.com.